It is 6:40 p.m. on Monday, April 29. At around 9:30 this morning, I day traded option contracts and got a return of 100%.
Stop the cap.
Here's the proof. I'm gonna tell you, if I went out of my way to Photoshop that, you must think I have a lot of more effort into these videos than you think. I'm gonna go on the laptop and show you how I did it, why I did it, and why I set my take profit and stop loss levels where I did. Cue a really epic transition.
One pathetic sob story later.
Now that we're on the screen and my big fat ugly face isn't really the main part of the video, we can look at this beautiful trade that we ended up taking on QQQ. So, to start off with the introduction, you can see the text box here. We entered puts right at market open for $35 a contract, and our take profit sold at 100% with the contracts being valued at $70. So, in this yellow little sticker note that we have here, I'm going to explain why puts, why the 2-to-1, and why set to forget. So why puts? Basically, there was this gap. If we take the measure tool and we measure how big this gap was, it was around a 1.7 strike gap, which, if it were to fully close, would almost guarantee 100% based on 0 DTE's delta. But one thing that I also wanted to point out, what's big in this trade, is that if we take a look at the daily chart and we look at its monthly VWAP, we can see that we've mainly been trading below its monthly VWAP. We've actually been exceeding its first deviation of the monthly VWAP, and it's retraced all the way back up to the actual VWAP line. So it would almost sort of be a prediction to reject, since price has been trading below VWAP the majority of the whole entire month. You might ask yourself, like, no, why didn't you take a look at the weekly VWAP? Why didn't you take a look at even the session VWAP? And this is because if we actually were to do that, all we would be able to see on that, hold on, let me just switch it to the monthly to the session. So if you were just to look at session, the VWAP line changes, and you can't really get a gauge for where the lines are when there's literally like such a tiny gap and like there's no movement in the VWAP lines. And if we were to look at weekly, it's Monday, so it's the brand new start of a week, so it's going to look the exact same. Let's go to weekly. Yeah, it looks the exact same. So that's why I went one more over and we took a look at the monthly, because that's the one that we're going to get actual real life previous data rather than a brand new line that's made off of literally no data. So that's why I entered puts. Why the 2-to-1 ratio? So today was Monday, and commonly shared with the day of Friday usually means high volatility. This is because over the weekend, those 2 days of no trading, lots of stuff can happen. A company can release something big, a company can fall, a bank could collapse. Something happens on weekends. Lots of things happen on weekends. The whole entire economic world does not stop for the weekends. Us retail traders just can't trade on weekends. And what do you get to do with that? But usually that builds up pent up orders and usually high volatility. Another reason why the 2-to-1 was set. Earnings. This week is a huge week in earnings. Apple, Amazon, AMD. This is a really big earnings week. And this does a lot of things to the market. In summary, it creates volatility. Volatility being more buyers, more sellers, more people are involved in the market this week because companies are releasing earnings. So that's why the 2-to-1. That's why I set the take profit at 100%. 0 DTE delta. If for those that aren't too familiar with options trading, as a contract gets closer and closer to its expiration, the delta increases. Delta being the amount of change the contract's price will move based compared to its underlying stock, which is the QQQ. So 0 DTEs already has a inherited high delta since the contract is literally expired now. It expired at 4 o'clock today. So its delta was gonna move a lot. So if this gap were to fill, I knew that it was gonna get 100%. and we actually missed out on profit. I'm going to put on the screen right now the actual contract's maximum hit after this trade. I believe it hit $100 and $103, something like that. So theoretically, I could have 3x'd, but I didn't want to get greedy, and I felt like 100% was happy for me. Another reason why the 2-to-1 is based on my coin flip strategy. So if you were a monkey and you were trying to pick if a stock was going to go up or down, it's a binary option. It's either going to go up or down. So you could flip a coin, and if it heads, you go up, tails, you go down. Stupid like that. You'd be correct 50% of the time if you were to trade a lot of times. Now, as my strategy goes, I try and increase that number by just common stock market knowledge. If there's a big gap ups show a tendency for filling. Major news, knowing that there's going to be a high volatility, knowing that implied volatility is high because of major news like earnings, like CPI reports, like a collapse of a bank. Who knows? But that sort of history of knowledge is what increases that 50-50 into what hopefully is a 75-25, a 60-40. As long as you're able to trade above a 50% win rate and your take profit is 2-to-1 with a stop loss at 50%, mathematically you will be profitable. So that's why I did it. And so last thing I'm going to touch on is set forget. So in this trade, I bought the contracts at literally the first minute of the open. I had the contracts already popped up and open to take the trade, and I knew I was going to end up taking, 430 puts. So I knew I was going to end up taking those contracts just because I kind of just guessed where the delta was going to move after those 1 TTEs become 0 TTEs. And so I had it on a market order, didn't do a limit order because I knew that if I did a market order, I'd get filled faster. And so I placed the trade, and I literally set my phone down and went to go watch a podcast. I got the notification saying that the stop loss order was canceled and that the take profit order was filled. That means, voila, we hit our take profit of 100%. This is because as traders trade and they see their money move, it is an emotional thing to trade. Almost 90% of trading is emotional. And recently I've been having a problem of selling my trades at 60%, cutting my losses when it's super late, and basically selling early and quitting to sell when I should sell. So putting the phone down and letting the take profit and stop loss do its thing and actually do its job of filling the order when you don't have to, basically takes the emotion out of trading and lets all of my analysis take over from there. And I can almost guarantee you, if I saw that my contracts were up 70%, 80%, I wouldn't have stayed in. I would have cut it. But knowing that I could have made that extra 30%, it's a lot more fulfilling knowing that I set my take profit there and I knew it was going to hit there. And it actually went farther, but to 105, 103. But I'm happy with what I got. Yeah. So that's basically the trade. I didn't trade anymore because I'm kind of like a big one trade. If it's green, you're done. If it's red, you're done. Take the trade and move on with it. But in this series, I think I want to make it a series. We're 1-0. That makes our win rate 100%. It's definitely not going to stay there. I'm definitely going to make a video about taking a loss. And that's going to be a fun video to make because I'm not going to want to upload it. But hey, that's the life of a trader that wants to become an influencer. So it is what it is. Yeah, I'll catch you in the next trading day. Toodaloo.